Welcome to About Money. I'm glad you're here. I want to tell you about the scariest day I've ever experienced and one that should scare you as well. I've been in this business for 40 years. There are very few days in which I'm fearful, but April the 7th of 2025 was one of those days. That was a day in which the market could have crashed, not a crash like we saw in '08 or 20, but a crash that would have brought down the financial system. So why do I say that? So let me tell you, it actually starts back. You have to understand what happened in 1987 to understand what happened on April 7th. April 19th, or October 19th, 1987, was Black Monday. The Thursday before Black Monday, the market had taken a drop. On the Friday, the drop continued. And on October 19th, the market took its biggest drop in history that it's ever taken. If you think about April 7th, Trump announced his tariffs on every country in the world, on every place in the world, on April the 2nd. On April the 3rd, the market took a big drop. On April the 4th, it continued the big drop. And on April the 6th, that Sunday evening, the futures showed the market could open down 6.5%. So why is that important and why is that scary? Back to 1987, the market was on its way down, but on October 19th, the market made its big crash. And what had happened is prior to October 19th, prior to that Black Monday, the stock market had been trading about 200 million shares of stock. On that day, it would trade 1 billion shares of stock, 5 times normally what it took. And the stock market opened early in the morning, and at that time, computer trading was just barely beginning. It was at the very beginning. And when I say computer trading, it was set up so that insurance companies and portfolios could, or not insurance companies, but portfolio managers, institutions, which included insurance companies, had insurance. They were able to push a button on a computer and sell $25 million worth of stock at one shot. And it wasn't just one company, it was multiple companies. And so when the market opened on Black Monday, you had a number of people realizing that the market was going down, so they pushed the button to sell $25 million worth of stock. But what happened on that day was something unusual because the volume was so great in that first few minutes that the playbacks didn't come back. So it didn't look like the trades had been executed. So the people who were pushing the button thought, my trade didn't go through. I'll push it again. Still no playback, so they pushed it again. Still no playback, so they pushed it again. And so instead of selling 25 million, they were selling 50, 75, and 100 million. And not just one or two, but a whole group of people, a whole group of traders. All day long, that process went on. The market dropped, would begin to slow down, recover a little bit, and then drop again. Recover a little bit, drop again. And that's what happened on Black Monday. So to correct the problem, the, the, the exchanges got together and they decided, okay, if we see a drop of 7%, what we want to do is we want to set up circuit breakers. If the S&P is down 7%, we're going to stop trading for 15 minutes. That will give the time for the people who are pushing the buttons to realize their trades have gone through and they won't panic and push the buttons again and again and again. And that's how we got the circuit breakers in the first place. So now I want to take you to April the 7th. April the 7th. Actually, to April the 6th, because the market was showing it was going to open down 6.5%. And it wouldn't have taken much to see the market down 7%. And no longer are we talking about traders pushing the button to sell more stock. We're talking about computers setting up automatic algorithms, algorithms which are going to trigger and sell more. And all you do by shutting down the market at that time is that you set up the computers to feel as soon as the market opens, they have to sell more. And the chances were that on April the 7th, had we opened down 7%, the computers would have been quiet for the 15 minutes, and then the computers would have gone again. And they would have sold, and they would have dumped another 7%. Market would have closed. They would have waited the 15 minutes and dumped again. Market would have closed. They would have dumped again. How far down it could have gone, who knows? But once that selling began, you have another complication going on, because no longer are you just selling in the market. You have a number of hedge funds and a number of institutions that have margin. And when the trades go down 7%, for the margin accounts, they're not going down 7. They're going down 14 or 15. And in some cases, they're wiping out the entire equity of a portfolio, so that they begin to sell at losses and bigger losses, and wiping out the hedge funds, wiping out the institutional traders. They were selling everything. And that selling would have compounded, because no longer do you have just algorithms selling. You have hedge funds selling. You have institutions selling. You have one circle going round and round and round. Could we have been down 30%? Easily. Could we have been down 50%? Easily. That's what was so scary about April 7th of 2025. Could it have gone down so far that it could have put banks at risk? Because remember, who's loaning the money for the margin? Those are brokerage houses and banks. And a lot of banks own brokerage houses. And so when the things collapse, that is a hit on the banks. If they go negative equity, it's the banks that cover the loss. You know, April 7th was one of those days, but it wasn't the only day in which there was a lot of danger. And so what happens? On August the 1st, 2024, the market takes a big drop. On the 2nd, it takes another big drop. Now, what happened probably on July 31st is the bill for margin comes due. This is when you have to pay your margin bill. Only there wasn't enough money to pay the margin bill. So you have to sell to cover that. So they do sell. And they sell on August the 1st, August the 2nd, and on the 5th of August, everything collapses. And in Japan, the Japanese market drops 10% on that day. Everything comes apart. We saw a little bit of carryover in September, and then things began to ride around. But we have no idea of how much money was being handled in the carry trade, or who the players were, what the potential was for that whole thing to come down. Things that have never happened before happen all the time. And you should be aware of that. You should be aware of that potential risk of things dropping overnight. Go back to 2010, computer trading system. This time, the algorithm went wrong. The market drops. It dropped what? 1,000 points from 7 or 8,000, dropped 1,000 points or maybe more, and then suddenly took off and went the other way. I can remember that time. It did that in like 30 minutes or less than 30 minutes. I remember trying to buy a stock. I bought a stock that had been trading at 40, traded down to about $5 a share. I bought stock, and then it soared. It soared and put, I think it was, I don't remember if it was Apple or if it was IBM or what it was, but I remember I bought it, and then it soared, to 8 or 10 times the current price. I was so happy. I made a lot of money, but the exchanges came along and the SEC came along and they negated all those trades that were done. It was too bad. But in the space of an hour, in less than an hour, the market dropped 1 or 2 thousand points and increased 5 or 6 thousand points from that point. Things that have never happened before happen all the time. You should be aware of that. You should be ready for that. You should be ready to take advantage of it. If you have mutual funds, are you thinking that the mutual fund is going to take advantage of that? No. ETF's going to take advantage of it? No. Are you going to be able to take advantage, or just going to sit by the wayside? And we don't know what happens if we have a financial system collapse. We do know that the companies that are running and making money, just because the stock market drops does not mean that they're going to go up. Even with April the 7th and the market doing what it could have done, would not have meant that Microsoft would have shut down, that Amazon would have shut down, that Boeing would have quit flying planes, that Costco would have closed their doors and no one could have bought food. No, it complicates things. When the financial system sets down, it complicates transactions, it complicates worldwide trade, complicates all those things, but it doesn't shut down the businesses themselves. So if that happens, you want to be in a position to take advantage of it. You want to be able to dump those stocks which are not going to take advantage and buy those that are going to do what they need to do. Things that have never happened before happen all the time. You should be aware of it. April the 7th was the scariest day in my 40-year career. Shouldn't have been. 1998 could have been the same thing. The flash crash could have been the same thing. The carry trade could have been the same thing. But April the 7th was so very visible because the market had dropped on the 3rd of April, on the 4th of April, and the futures were showing the market was going to open down 6.5% on that Monday. That was terrifying. I actually prepared Sunday night and again on Monday morning to sell, to make my rapid sales along with the computer. Pull it down, make sure that things are ready. That was what I did. Now, in fact, the market didn't open down 7%. The market only opened down a couple percent and things eased up from there. But it could have been. It could have been. And would you have been prepared? Could you have been prepared? If you have mutual funds, ETFs, could you have pulled the trigger and bought stocks? Could you have done that? Probably not. There's a nimbleness. That's what we do at Adams Financial Concepts. We truly look at what we need to do in client portfolios. If you have questions, if you want your portfolio evaluated, we're more than happy to do that. No obligation. We'll tell you what we think about your portfolio, where we think the returns can be improved, where we think you can make more money. Just send me a message here on LinkedIn, make it happen, and I will respond to that. Might take a day or two, but I will get back to you. So, April 7th may have been scary, but the next one could be reality. Don't let it happen to you. Get a hold of us. Message me right here on LinkedIn. And until next week, have a very good day and a good weekend.